Hey folks, what's happening? Where is Bitcoin going? Where is the stock market going? SP 500. This is an extremely important session. I hope if you guys watch nothing else, then you might just watch this one. This is Pablo He-Man again, coming to you from my beautiful island. And so without further ado, we all know some major, things have happened in the market. This is the way I see it right now. So last video I was undecided. I said, look, the situation I'm thinking of is a higher bottom on the SP 500. I said around on the SPY around 392. It pretty much is, that's exactly where it hit, almost exactly, and then we bounced up for 3 or 5 days in a row. I said about 299 on the QQQ. And if you're wondering why I'm talking about stocks, is because stocks basically influence where Bitcoin is headed. You can see that they've basically just been following each other. So on the stocks, on the QQQ, which is the Nasdaq ETF, I was saying bouncing off the 299 level, just went just a little bit lower to about 293, and then we bounced up. And then, of course, came that CPI result, Consumer Price Index, the inflation number, and just basically crashed everything. Now, and we can see the same thing in SPY. So if you bounced up from where I said a higher bottom, right? Kind of like forming a head and shoulders pattern off the SPY, and then bounce up. It was right on track and then hit, that bad CPI number. Now, the way I would describe this is kind of like, imagine if you are like a movie actor, like if you're on the Marvel movie set, and you're basically saying, okay, so this is the script. We're going to go to, we're going to walk up to this building, say this line, and then we're going to turn around and walk this way. That's what it says in the script. And except when you go and hit that line, and then the other actor stops acting according to the script, the other actor just continues walking in the same direction, and then you're thrown. You're like, this is not happening according to script. And this is actually what I would say is happening to our situation right now. It's not happening to script. What I had imagined, everything I have said so far was based on the fact that I think a fast drop in inflation is happening. What do I mean by that? Okay, this is the chart that I have shown all this time, and I've said that we have a fast drop in inflation. So this is the 1960s to 1970s. We're comparing inflation to that era because right now it should be pretty obvious that we're in a stagflationary environment. That's why I keep on comparing to there. Whenever you have an inflation peaking, so whenever you have inflation peaking in times like that, so whenever we have basically an inflationary peak, this is a concept we've emphasized many times. People in my Discord should know this very well, and obviously, once again, this video goes to my Discord first, and within about 2 days, I probably put it out on social media. So if you're watching this with a lag, just bear in mind, folks in my Discord are seeing it first. So basically, if we say the blue line here is inflation. When inflation peaks, right, 1974, market bounces. When inflation peaks, market bounces, right? And sometimes they do a really big bounce. So here, for example, 1991, inflation peaks and comes down, the blue line, market bounces in the huge bounce. So, whoa. The problem is, as I have been saying, what you need is for inflation to fall off really quickly, like just drop off like a cliff, right? Whenever you have a fast falling inflation, market just takes off, and you might think, oh, that's not a big bounce. I mean, look at that. That's from 61 to 107. So that's like 47 out of 61. That's like a 70% bounce in the SP 500. Remember, so far, we've only had a 10% bounce from the bottom in the last 2 months. Imagine a 70% bounce from the bottom. That would be massive for the SP 500. But however, what I think is happening right now is the situation we're in right now is more like this place here, 1970. In 1970, you can see inflation also peaked, but it came down slowly in the first few months. It peaked around here, say January 1997, right? January 1970. And then until about, say, September, or let's say August, for those 7 or 8 months, from January to August, it was kind of falling, but slowly falling. And when that happened, basically, the market didn't bottom till here, which was April. The market didn't, May 25th. The market didn't, inflation peaked, again, I'll say it again, January, end of January, mid-January. Markets didn't bottom until, 25th of May. So that was a 4-month lag in between. And we can see that this is obviously much slower falling. This inflation is fast falling, right? Oh, come on. This is fast falling inflation, and so we see markets taking off like that. So you really need fast falling inflation, and that's why in the past we've been thinking it's fast falling inflation because, okay, look at this here. Let's look at the numbers. It's gone. If look at these blue numbers, I'm looking at these blue numbers here. Okay, follow with me. It's gone from 6.2 to 6.1 to 5.8. So 6.2, 6.1, 5.8, back to 6.1, back to 6.0, and then back to 5.4. 6.0, 5.4. That's in August already. So it went from 6.2 to 5.4 in a space of 7 months, and it's basically relatively gone sideways. 6.2. I mean, the worst they got is 5.8, so that's 0.4% down by March, 2 months later. And whereas this one is back to 6% again, and then 5.4%. So that's 0.8% down. It's went down 0.8% in a matter of 7 months. So that's slow falling inflation. We'll have a look at this one, fast falling inflation. That's 12.3 in exactly 30th of December 1974. 12.3, and then 11.8, 11.2, 10.3. So that's 2% fall in inflation by April. So in 3.5 months, because you've gone 3 months and 14 days, 3 months and 14 days, and it's fallen 2%. Inflation's fallen off 2%. That's fast fall off. Whereas you see here, it's basically gone from 14.8% to 14.8, 14.7, 14.4, 14.4, 13.10, 12.9. So 12.9, 12.6 to 14.8. That's 2.2%. 2.2% fall in inflation. 2.2% fall in inflation between 31st of March and September. So in 6 months, it's fallen off 2%. 14%. So that's a faster fall off in inflation. Right now, I think what we're getting is something in between. It's not quite as slow as this one, and it's not quite as fast as this one or this one. So right now, what we're looking at is here. So we've had 9.1, 8.5, 8.3. So let's say a 2% fall off would be something like 7.1. We need to go from here to 7.1 to about, say, 7.1. Yeah, about there. About 7.1 by, say, November, December. Right. I mean, that is 1.2% lower from here. We can do that in the next 3 months. Right. Because here, say here, it's gone from 9.1 to 8.5. That's 0.6% move in 1 month. Whereas here, last month, what just came out was 8.5 to 8.3. That's a 0.2% move. So that's actually a big deal. You think it missed the estimate by 0.2% because the market was projecting it to go to 8.1%. What's the big deal? That's actually a very big deal for the markets. It really depends on how fast inflation can fall off here. So I don't think we're as slow as 1970. When I'm having a close look now, I don't think it's as slow as 1970, and it's not as fast as 1973, 1980, 1980s, 1980 and 1991. It ideally really needs to be coming off like this. Right now, if it's going to do that, then then like we saw in 1970, markets could have one more leg down. Where would it go to if it does one more leg down? Well, see, here is the COVID crash. Here's the COVID crash, and its top was around 3390, just under 3400. We're at 3900 right now. That could bring us back down to the COVID crash, because a lot of this run up was due to printing of money, and you can see with the printing of money, helicopter money, stimulus is given to your average Americans, average Australians. So that's why inflation has gone up. For it to come down to here, that makes sense. But will it do that in the next leg down? Will it do that, or will it bounce off double bottom, bounce up a little bit, and then come down in say like mid next year, later next year? That's both scenarios are possible. It really depends on how fast inflation is falling here. So fast falling inflation, we would likely see a double bottom by, say, next time the CPI number comes out is on something like the 11th of October. In 1 month time, by the 11th of October, by say 11th of October would be here. By here, we could do a double bottom and then bounce up. That'd be the optimistic scenario. And if we have another miss by, say, 10th of October, we have another slow falling inflation, then boom, then I think market comes down to test this level around 3380, somewhere around there. If that was to happen, what would happen to Bitcoin is basically a double bottom would be Bitcoin coming down to around, say 17K, maybe even go a little bit below to 16,800, 16,900, somewhere around there, and then bounce up. That would be the same scenario. That would happen if we get a double bottom on the stock indexes. But however, keep open-minded that now, because the bad CPI number, because CPI is falling too slow, the probability is open now for Bitcoin to actually snap straight through here and basically go to a lower bottom, as in like somewhere break that level of support. If it breaks that level of support, then it's really about 13 to 12K area. That's where it should be headed. I don't have a crystal ball, as you can all see. I thought it was going to be fast falling inflation. Turns out it wasn't so fast. It wasn't going sideways. It wasn't slow, but it wasn't fast either. So that's why I'm changing my forecast depending on the data that's coming through. Now, one important chart I'd like to show you guys, really important here. Oops. So this is the inflation numbers breaking down by color coded. So we can see that that is actually petrol prices, energy prices. That's actually food prices. That is commodity prices, and that is services prices. And that's, as you can see, June 2021, that's June 2022, and these are the two latest, July, August, whatever. We can see commodity prices are going down. Food prices staying stable, energy prices going down. See the orange part getting smaller and smaller. But this blue part getting bigger and bigger, which means services prices are going up. And altogether, these four colors make up what we call the inflation index, CPI. Yeah, core CPI. See here, it says top line contributions and core CPI. So that's actually the numbers you get every month. We can see overall it's going down, but this is not a good trend. As it's going down, energy and commodity prices are shrinking, but services are going up. And I'll tell you why that's not good, because imagine this, guys. So basically, remember how we had the whole war situation? We had the whole war situation with Ukraine and Russia. And what happened is, what that means is basically energy prices, like electricity prices, natural gas prices for folks living in Europe, we all know, has shot up like 10x or something crazy. And that means, petrol prices gone up. Wheat prices gone up because Ukraine and Russia are two of the largest wheat exporters. They're the largest, potassium and phosphate, which are used as fertilizers. They're some of the largest fertilizer exporters. But the problem is this. they have gone down, okay? Those prices have gone down lately, and we've been watching that. We've been saying, yep, petrol prices have gone down. That means that, wheat prices have gone down, and we saw it in the chart. It's gone down. That's good for inflation. That's true. That's why inflation is going down. But what's really not good is that blue part, as we saw the what you call it, where was the chart? Yeah, as we saw here, the blue part getting higher and higher and higher, making a bigger part of the inflation bar, so to speak. And why isn't that good? Because, okay, here's the thing. Petrol prices can drop $10 tomorrow. Like, what I mean is the petrol futures can go from $90 to $80 to $70, like, overnight. Food prices or wheat prices can drop like that, right? It's just a traded commodity. It goes up and down all the time. But however, services prices cannot, because what's services? Think about it in your head. What is services? Services is basically every time when you go to the mall and you get a haircut, the hairdresser, when you get a haircut, that's services prices. You get, ladies, you get a nail salon, that's services. You get a massage, that's services. You have a waiter bring food to you, that's services. And the problem with that is basically services is 85% made up of paying wages to a human being, to the hairdresser, to the nail salon lady, to the masseuse, to the waitress or waiter. So when you have that, basically it means wages are going up. When wages go up, they don't just come down next month. Petrol prices can come down, and wheat prices can come down because it's traded like a futures prices. But however, when you go to people see petrol prices going up, people see food prices going up in the supermarket, they go to their boss and they say, I need to ask for a raise because CPI inflation's going up. And your boss gives you a 5% rise, 6% rise, 7, 8% rise, wage rise, whatever it is. And when they give that to you, that's a contract. You sign that contract for the next 1 year, next 2 years, next however many years. You do not just, your wages do not go down next month just because petrol prices go down. Your wages stay the same. Your wages almost never go down, right? So what happens is basically that's what we call sticky inflation. It goes up and it stays up. It doesn't come down. That's why the Fed is so worried. That's why at Jackson Hole, what the Fed said freaked out the market, and all the markets tanked about a month ago, because he says, look, what we're afraid of is wage inflation spiral. It's basically a self-feeding negative cycle. It's when you see inflation first going up, right? Before there was no inflation, so you don't ask for a wage rise. Then you see inflation going up, so you say, boss, I have to have a wage rise. And Americans got, on average, a 6% wage rise, like compared to a year ago, on average. And that's when it sticks. It stays there. So then, even as petrol prices, as wheat prices, as commodity prices go down, you go to the shopping mall, you say, well, but my haircut price has gone up. The waiters, wages have gone up. So food prices, the restaurant prices has gone up. The nail salon price has gone up. There's still inflation, boss. So next year you go to your boss, you see the reviews coming up, I need another raise. So it then becomes a self-reinforcing negative cycle. And that's what the Fed is really, really afraid of. And unfortunately, we're starting to see that happen. So, I mean, as you can see, I'm no good at predicting where inflation's going. If I have to take a guess at it, I would say it's getting sticky, as in it's going to get stuck around 5%, 6%, and that's really not good. The Fed really doesn't want it to be there. The Fed's mandate, their reason for existence, is to hammer it down to 2%. So, I mean, as I said all along, I think this bear winter is going to create some fantastic buying opportunities for all of us, whether it's crypto or houses or beachfront properties or bonds or stocks, whatever it is. But that bottom is going to come. Originally, I said 6 to 18 month time, and that was about 3 months ago when I started saying that. So I said by the end of 2022 to end of 2023, we're going to see a bear winter bottom. And we're not there yet. That means Bitcoin below 17K, something like 12 to 15K, maybe even lower. So I was thinking we'll have a bounce first, but now with the inflation doing this, it looks like we could have that leg down sooner than what I originally anticipated. So we can go down to that, a lower bottom sooner. It could do a double bottom here and bounce up and then go down next year. Or it can just test a lower bottom, test a double bottom, and then just go down in the next 4 to 6 weeks. I can't be 100% sure because it really depends on what the number is on the CPI inflation number is going to be in the next, on the 10th of October, on the 10th of November when it comes out. The next two CPI numbers are going to be decisive. And the example, the reason why I say CPI numbers are so difficult to predict is because it's a random walk around a central true mean. What I mean by that in statistical terms is this. Imagine the water behind me, the tide, right? The tide is going down. We can measure it. The tide is definitely going down. But how do we measure it? We measure it by putting a little buoy, a floating buoy, on the water. And we see the floating buoy go up and down every couple of seconds as the tide comes in and out, right? As the waves come in and out. But if we were to measure this over hours, over a number of hours, we see, right, the thing bobbing up and down, but it's essentially going down. So the tide is going down. Inflation is going down. But if you were to look at it every few seconds, you see that it's actually up, down, up, down, up, down, up, down. Depends on where you measure it. It's doing that. You have to wait for like 2 hours and you say, over 2 hours, on average, it's gone down. But on every single measurement, it could bob up and down. That's what makes it so difficult to measure. I mean, the next inflation number we could get, right now it's 8.3, could be 7.8. If 7.8, then we're back to fast falling inflation again. And the markets would bottom and try to bounce up again. So it's really difficult to tell. In general, I would say it's really not good when services inflation is up like this, because services inflation do not go down just because petrol prices go down, just because wheat prices go down. It's sticky. And services make up something like 2/3 of US economy. At least it makes up more than 50% of the CPI inflation basket. So overall, I guess there are a lot of uncertainties. What can I say that is more of a certainty? In conclusion, I would say I am still looking for the markets to do a bear winter bottom, both stocks and crypto, somewhere in late 2022 to late 2023, somewhere in there, in that 12-month area. And that next leg down could come sooner than later now, because inflation is slow falling rather than fast falling inflation. It's not as slow as 1970, but it's not fast either. But however, I can't rule out that Bitcoin and the stock market, the SPY and QQQ, do a double bottom. So the low we had in June, they could both go down there, do a double bottom test there. That means Bitcoin around 17K, maybe high 16K, and then bounce up for a couple of months from there, and then go down. That's also possible. Okay, thank you guys for your time once again. I'll catch you guys next time. Signing out. This is Pablo He-Man.